The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Tuesday morning, everybody. I'm Tommy O'Brien coming to you live from TFNN 9:06 a.m. We got 24 minutes to go until the start of trading, and we got a pretty calm market to kick things off, especially with a couple economic data points out there that we'll get into in a moment. Right now, we got the S&Ps up 2 points at 42.48. Tech stocks pulling back a bit from the lofty all-time highs we had overnight. You're looking at NASDAQ 100 negative by 5 points at 14,112. 14,000. About 3 a.m. Eastern time. You get the Dow positive by 20 points, 34,295. The Russell positive by 3 points. Crude continues to show strength. This crude almost made it to 7 just in the last few hours. We're trading at 71.65. Gold contract holding kind of right where we were. Whoops, let me back that out. Right where we were as of the bounce yesterday morning. Gold just sitting at about 18.67, positive by $1 on the session. Technically, you got silver, negative 26 cents at 27.77, and notes and bonds, some pretty tame action this morning. You got the 10-year negative by 1 tick. We're talking about a yield on the 10-year just above 1.5%. You got the 30-year negative 6 ticks at 158.13, and we'll jump over to that volatility index, as I mentioned at the top of the morning market kickoff, at the top of the hour update. VIX this morning 1664, elevated levels yesterday. We reached a level of 17. You see the VIX kind of taper towards the end of the day as the market accelerated higher. But 1664 in that volatility index. Let's get into the two data points that we'll be looking at this morning in terms of retail sales and PPI, producer price index. Retail sales drop, as Bloomberg puts it, as I talked about in the top of the hour update, hinting at a shift on spending on services. Okay, you get into the numbers here. The total value of retail purchases fell 1.3% in May, following an upwardly revised 0.9% gain in April. The median estimate of economists called for about a 0.8% decrease. So retail sales decreasing more than the market was looking for. Okay, so soft retail sales. That's the theme there. Now, you get into more than that, though. How about when you get into the actual raw numbers of it, okay? Because these are all the headlines you're going to see. You're going to see the headline in terms of retail sales falling 1.3%. You're going to see the estimate being 0.8%, okay? But they're staggering numbers. The total value of retail sales was $620 billion in May, well above the almost $526 billion in February of 2020. Now, here's what I just want to point out, folks. There's the calendar. May's got 31 days, as we know. How many days has February got? It's 2020 leap year, 28, 29 at the most, as in not quite comparable. But you see, what they did is a good job here by Bloomberg, because I want to see comps prior to COVID, okay? The last month we had prior to COVID was February of 2020. $526 billion was the retail sales number. So, yes, you can see we've decreased from the number we had in April, okay, but still pretty healthy retail sales in a big way. When you're talking about almost an extra $100 billion, I mean, that's almost an extra 20% above what we were pushing for retail sales in the month of February 2020. Stimulus, I'm sure, a big element in that in terms of people, consumers, most particularly, having the money to spend on retail sales. Nonetheless, a little bit of a miss from what the market was looking for there, okay? Now you get into more in terms of what we're talking about. Consumer spending expected to continue to strengthen. The pace of forecast to moderate as enhanced unemployment benefits expire and stimulus checks are spent. That's going to be the real question mark here, is what happens when the stimulus money that people have in their accounts still, because we're just opening up, goes away. And do we get the jobs back quick enough where we have enough money out there for consumers to keep that spending higher? Economists estimate a robust pace of overall household outlays in the second quarter before a moderation in the second half, according to a Bloomberg survey of data. 8 of the 13 major retail categories posted declines in sales receipts, okay? 8 of the 13. Excluding vehicle sales, retail sales decreased 0.7% in May. Motor vehicle and parts dealer sales fell 3.7% in the month. Furniture stores, electronics outlets, and building materials also posted declines in receipts. Restaurant sales higher by 1.8% in May. You got a shift towards services spending as social distancing restrictions ease and health concerns decline, as they put it. So-called control groups, okay, which exclude more volatile categories, including food services, car dealers, and gas stations, fell 0.7% in May after a revised 0.4% decrease in April. Excuse me. So that is the number for retail sales. So what I take away from that is some decent numbers, not quite what the market was looking for, definitely not a beat above what the market was looking for because the market was factoring in. Yes, we're spending $620 billion versus $526 billion. But guess what, folks? We got a lot of stimulus out there. The market knew that we were going to be big numbers. We've been locked down for 16 months. Okay, yeah, that's a healthy number. But these should be some staggering months that we got coming ahead of us in terms of people getting back out, people having savings in their bank accounts to spend on consumer, whatever they want to spend on, okay? But a miss in terms of not quite living up to what the numbers were expected by economists. Now, you take that and you get into the PPI data. Producer prices climbed 6.6% in May on an annual basis. On an annual basis, not really a good comparison. I harp on it all the time. I really don't care what was happening compared to last May, because last May, all hell was breaking loose, folks. We couldn't even get out of our houses, right? So not really a fair comparison, but nonetheless, the largest 12-month increase on record. We're making a lot of records in the last 16 months, folks. Hopefully we never live through anything like this ever again, of course. Producer prices rose at their fastest annual clip in nearly 11 years in May as inflation continued to build in the economy, the Labor Department reported Tuesday. Now, Chairman Powell, the Fed meeting begins today. Tomorrow, we get an announcement at 2 p.m. We get a press conference at 2:30. You're going to see Chairman Powell asked about both of these numbers, I anticipate. The 6.6% surge, the biggest 12-month rise in the final demand index since they started tracking the data point in November of 2010. Remarkable that you think about. I mean, you're talking about these numbers weren't even in there in terms of being tracked by the Bureau of Labor Statistics 2010. My goodness, on a monthly basis. PPI index for final demand rose 0.8%, ahead of the Dow Jones estimate of 0.6%. That's a little bit better of a comparison because the market is saying, okay, what have we done since last month? Producer prices index for final demand rose 0.8%. Market was only looking for 0.6%. Those higher price pressures, there we go, came amid a pronounced dip in retail sales, as we just talked about. So you have a dip in retail sales. So sales are missing at a time when inflation is running hotter than expected. Those two are not good combined, not good at all. Goods inflation continued to be the dominant inflation force, rising 1.5%, as opposed to a 0.6% increase in services. In the pandemic economy, goods have run well ahead of services as economic lockdowns constrained consumer demand for service-related purchases. Not surprising there, right? Services are just starting to come back in terms of restaurants, movie theaters. I went to an indoor dining restaurant, folks, for the first time in probably 16 months this past weekend. Went to a movie theater inside as well. It was glorious. I'm vaccinated. Didn't have to worry about it, but those are just beginning to happen. Myself, that was the first time that I was kind of out there, even though I've been vaccinated for a month or two. Service has taken a little while. We'll get into a little bit more when we come back from this. We have a couple more things to talk about in terms of grains, and all of those variables kind of combining here. But bottom line is, Chairman Powell, he's going to have to answer, hey, retail sales not quite where we want to be. Inflation, a little bit hotter than we thought. What's that all mean? We'll find out. Stay tuned. We'll be right back with our man Kevin Hinks talking options.
Golden ratios give shape to everything in our world, represented in the Fibonacci sequence. These special numbers define the patterns that make up our universe. Not even markets can escape the omnipotence of these ratios. Larry Pesavento is a 45-year market veteran who has published nearly a dozen books on the powerful patterns we find in nature and the relationships with the ever-elusive markets. Larry's newsletter, Fibonacci 24/7, will teach you to harness the power of these natural golden ratios in order to create successful trades. Fibonacci 24/7 is designed to teach the tools you need to identify and act on these undeniable and reoccurring patterns. Sign up for Larry's newsletter, Fibonacci 24/7, and you will also receive free access to his trading webinar, Trading Strong Trending Markets. Try out Larry's newsletter risk-free. All of TFNN's newsletters come with a 30-day money-back guarantee. TFNN, educating investors.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TESS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TESS proprietary algorithms, this feature-rich scanner instantly filters over 2,500 plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TESS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
Welcome back, folks. We get the S&Ps right now positive by 2 points. NASDAQ 100 slightly in the red to kick things off as we come into the opening bell 12 minutes away. NASDAQ 100 printing 14,155 last night. Remarkable prices across the board. Let's jump over to our man, Kevin Hinks. Every trading day, folks, 11 a.m. Eastern Time, fast market on the TD Ameritrade Network. Kevin Hinks, Alex Coffey, and the team at TD Ameritrade Network breaking down the market action, talking about example trades, hypothetical trades in this market. We got a couple data points this morning, influence things a bit. Kevin Hinks, good morning.
Good morning, Tommy O'Brien. You know, the data this morning was fairly mixed, Tommy. Retail sales, pretty big miss on the retail sales data, but the Red Book data was really strong. So I think this market, Tommy, after taking in all this economic data that I'm sure you've gone over, is waiting for Jerome Powell to really put all this economic data and all this inflation talk into a frame and move forward one way or another with this economy. So I think we absorbed all this data. The market has barely moved, and now we wait for Jerome Powell tomorrow afternoon. I think that is what this market is set up for anyway, Tommy.
It is remarkable, Kevin, that consistently we seem to get some economic data, whether it's this morning, like you talked about, we get PPI, we get retail sales, we get Red Book, and the market doesn't even budge, man. You know, it doesn't even move practically. We're sitting in a trading range in the S&P within about a few points of where we're at, no movement at all. As you mentioned, retail sales, a little bit of a miss from what the market was looking for. Strong retail sales overall, like we're all expecting. $620 billion in the month of May, I was talking about, just staggering numbers. But we all knew it was going to be big. We got a lot of stimulus floating around. People got it. We're getting back out to the real economy. And at the same time, Kevin, we have producer price indexes putting some pretty lofty numbers. Again, kind of what we were looking for. But it is interesting that on the side of, if you just take the retail sales and the PPI, not what you want to see in terms of retail sales below what the market was looking for, and actually inflationary data above what we're looking for. So we're not selling as many items as maybe the market was looking for. And when you're pricing them, it's actually getting priced a little bit above what they were looking for. I imagine maybe Chairman Powell might get a couple questions having to do with the data that we're getting. Transitory is the word, but he's going to get a couple questions with this data tomorrow, Kevin. What do you think he's going to be looking at when he gets those questions?
Yeah, all I can tell you is this, Tommy, from my career trading these markets since the 80s. There's 4 inflation measurements during a month, right? There's the wages data in non-farm payrolls. There's CPI. There's the PCE component of income and outlays. And then there's PPI. And I'm telling you, from a trading perspective, PPI has a history of not moving the market. It's just a distant fourth in terms of inflation, because it's not inflation that currently is hitting the U.S. consumer. So I understand that these numbers look big and a little hot, but that it's not surprising that they didn't move the market. So I don't know, that is always an interesting thing. And then retail sales, those are big misses in retail sales, because X vehicles, everyone understands that there's volatility in autos right now. And a number a little bit big, a number bigger than thought, doesn't really surprise anyone. Those numbers are uncertain and volatile. But the X vehicles and gas, those numbers being down 0.7 and 0.8, that's a little concerning. And that would tell me that this bond market shouldn't be selling off, and yields shouldn't be going up based on that data for sure, Tommy.
It will be interesting, Kevin, to see when the data really starts to matter, and you can't and I'm talking about myself and the chairman, of course, just that it becomes a little bit more difficult to explain away some of the transitory nature that we're dealing with right now, right? I mean, I just talked about, before you came on, Kevin, I went to indoor dining probably for the first time in 16 months this weekend, went and saw a movie inside a movie theater for the first time in 16 months. So we're still opening back up, and I've had my vaccinations for a month or two, but it's still happening. And I believe it's a correct term in terms of transitory, because we're in this just environment of everybody getting back to normal. There's still just this weird feeling of where we are in the pandemic, of getting out of it. But at some point, it's going to become difficult to say, there's a lot of influences that are going to go away. Don't listen to the numbers. And I imagine that time might be coming in the next 2 or 3 months. We're going to get, of course, it's remarkable. We're already in June 15th, man. Before we know it, we're going to be talking about non-farm payrolls for the month of June. And I imagine those expectations are going to continue to build as we've kind of had some soft numbers in terms of the jobs coming back, in terms of the retail sales, and then the inflationary data. I agree with explaining it away as transitory right now, because as you said, I mean, what we do? A third of the impact of the CPI data, Kevin, was autos alone we talked about last week. But at some point, those small transitory tendencies will work themselves out, and then things will get really interesting when you can't kind of explain it away so much. That's in my own head, but we'll see. What do we got coming on the program, Fast Market, at 11 o'clock today, Kevin?
Today we're looking at Oracle, that has earnings out after the bell in the A block of the show. And then we're going to look at food. We're going to look at Chipotle and McDonald's. And what we've been doing this week as we get to the end of earnings season is comparing companies. And so Lightfolio is going to do a presentation on Chipotle versus McDonald's. And remember, at one point in time, McDonald's owned Chipotle, Tommy.
Did they? I did not know that. I did not know that.
They spun Chipotle off.
Whew, talk about a brand, man. Chipotle. I'm a big fan of Mexican food, folks. Chipotle, that chart. Talk about a buying opportunity when they came out of what was the health problems they had down there. The stock makes it to almost 247, and we're sitting at 1579. The highs this year, folks, 1391. And as you mentioned, we get some earnings trickling into the end of things this week. Oracle, I'm pulling it up on the Thinkorswim platform. Kevin, I got a $3.58 expected move for an $82 stock as they'll be out with their numbers. I was listening to the show yesterday. Love the talk you guys were doing about Uber. We have some Uber in my newsletter. Folks, if you haven't checked it out, they go over everything. They set up the hypothetical trades. Even when earnings aren't going on, there's still volatility in this market, and there's a way to trade things with defined risk in options, almost regardless of what kind of market bias you have. Well, Kevin, we look forward to the program as always, man. We appreciate the education, and we'll be listening at 11 o'clock today, man.
Have a great day, Tommy. Thanks for having me on.
You too, Kevin. Thanks so much. Folks, tune in 11 o'clock today. You heard it. Kevin said it. From a trader's perspective, there's not much else that matters when you're a trader than a trader's perspective, folks, of how this market is moving. You heard him in terms of the PPI data, in terms of what he's talking about. That's why I love listening to that program. I learn something almost every day, folks, as I tune into Fast Market. I encourage you to do the same at 11 o'clock live today. All right, jumping back to some of the markets. As we mentioned, kind of a slow start to things, and we might get a slow day today. Market waiting for the Fed tomorrow. You know, that's the big data point that we're going to be waiting for. You get an announcement, all but consider that things will stay status quo in an announcement. But that press conference, it's going to be a big one, folks, because we have not had a Fed meeting since we got April and May non-farm payroll numbers. Now, if you back things up, if you recall, originally April non-farm payroll numbers, the lofty expectations were as high as possibly 1 million jobs added in the month of April alone. I think April came in at 266,000. You fast forward to May, we tamed things back a bit for the expectations. You still missed the number a bit. We came in, I think, 566. You add them both up, you're still just above 800,000 for April and May jobs added. We've had some inflationary data that the chairman's going to be asked about as well. Been a little while. We've got a lot of information since the last time they had a meeting, and Chairman Powell will be talking about it. I imagine it's going to be status quo, but we'll see. We find out tomorrow. Stay tuned, folks. We'll be right back for the opening bell.
Are you having fun trading the markets, but having trouble finding like-minded individuals to discuss your trading and investment ideas with? Become an apex predator in the trading markets and join the Tiger's Den Trading Room only at TFNN.com. The Tiger's Den is an exclusive trading room where successful traders from around the world come to exchange trades and ideas. Join the den and surround yourself with the sharpest minds in the trading world. Subscribers to the Tiger's Den are also the first to have their questions answered live on air and can privately chat with our TFNN hosts live during their shows. Interact with other Tigers and Tigresses as they share trading ideas, news analysis, and discuss the market action all trading day. Subscribe to the Tiger's Den risk-free with our 30-day money-back guarantee and become part of the TFNN trading community. TFNN, educating investors.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den Trading Room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We got markets open and we got the S&P dropping a bit on the open. We're still positive by about 1 point right now, trading at 42.47. NASDAQ 100 negative by 12 points, 14,104. Right near record territory right now. We had quite an acceleration into the close right yesterday across the board, but market's dropping a bit on the open. We get the Dow plus 13, call it plus 18 right now at 34,293, and the Russell positive by 2 points as well. Going to jump back to one more analysis out here in terms of retail sales. You jump to a nice tweet, not familiar with this gentleman in terms of who this is. Gregory Dacko, chief U.S. economist, Oxford Economics. Nonetheless, he breaks down some of the consumer spending rotation. Interesting to look at the breakdown in terms of where they are. Building materials, autos, electric, furniture, really putting a hurting on things. You put it on a graph here. Building materials down about 6%, call it 5.9. Autos, I think that number was minus 3.7. Where are we on the chart here? Motor vehicle and parts dealers, electronics, and appliance stores, as I mentioned, down about 3.4. Furniture down 2.1. On the flip side of that, clothing and accessory stores up 3%. Food services, I think that's 1.8. Health up 1.8 as well. And as the caption that he puts, don't be fooled. Strong consumer spending ahead, driven by services. All right. Now that's the headline on Bloomberg as well, and it makes sense. The real question, folks, is where does this sort out once the transitory tendencies that we have in place in the market sort themselves out? You figure that one out, and you got the keys to everything, because that is the keys. And that's why all this economic data we get can kind of be explained away, because nobody really knows in terms of how those numbers are going to be. This is not a normal type of retail sales number, folks, when you have certain industries flourishing in terms of food and clothing and health and personal care. Meanwhile, you have certain other industries really pulling back as we come out from this pandemic. There's just a dichotomy going on in terms of where you are, but nonetheless, as they put it, funky looking consumer spending rotation. Good analysis, in my opinion. All right, let's jump around to what else we got going on. How about the U.S. and the EU resolving a 17-year Boeing Airbus trade dispute? So the two sides agreed to suspend for 5 years tariffs that stem from the dispute. EU is pressing the White House to reach a deal to end the trade tariffs imposed during the Trump administration. Boeing and Airbus shares rose on the news. So you got both of them. Boeing had pulled back a little bit. I was looking at this morning, though. We got the S&Ps a little bit negative now. We're down 2 points on the session. So Boeing catching a little bit of a bid. As I mentioned, they were higher pre-market. You gave it up a bit, but the market liking that news on the open. Boeing up about 0.7%. Boeing, of course, the American company that makes airplanes. You got Airbus, the European company makes airplanes. There's only two of them. They got a duopoly on airplanes in the whole world. They're both going nowhere, as in the U.S. would never allow a company like Boeing to go bankrupt or go to the wayside. We need a company from just defense perspective alone that makes airplanes. And that's why, if you want to make a case, Boeing's going nowhere, folks. You were down to $89, all right? It's been a slow crawl back, but you put this thing in. We're on an upward trend channel. There's no denying that. Now, you back things up to prior to COVID. You were at 350. You back things up prior to the debacle with the 737 MAX, and you were almost pushing 450. Boeing sitting at about 246 right now. You jump over to the Analyze tab on the Thinkorswim platform. You're talking about a market capitalization of Boeing of $144 billion. Not bad when you think about the command they have in terms of a duopoly on airplanes. And I imagine that the travel industry is going to be coming back strong in the near-time future, folks, once we overcome the pandemic in completion, right? In the U.S., things picking up in a big way. Domestic airlines, demand really picking up in a big way. But international, it's going to take some time in terms of the pandemic still spreading in certain areas, countries a little bit wary of opening up international travel across the board, but it's coming, folks. It is. And Boeing, they're up about 0.9%. Some more positive news for Boeing, as it looks like their spat with Airbus will be tamed for at least the next 5 years on that news. All right, going to jump over to Uber. Got some Uber in my newsletter, Rocket Equities and Options. Uber down about 2.4% right now this morning. Looks like they're going to be pushing out some shares. So Uber, pulling up the news. How many shares was it? I had it up here. 1.3 million of common stock by selling stockholders. So that news pushing it down about 2.2% on the open. You take a look at Uber. Now, I've talked about this in my newsletter. You back things up to the beginning of COVID. Okay, in terms of the low, we got $13.71. Remarkable, the prices on all of these equities we got to. You run to $64, you put it on a Fibonacci retracement. This thing pulls back almost right to a 382 of that entire move from the lows of $13.71 to $64.50. Now, so we have a 382 retracement from the entire run, okay? And then what I'm going to show you, though, is that if you pull up where we've been since November, now that's when we got efficacy numbers. I'm going to delete this trend. We have an area of confluence here because the 618, folks, the 618 retracement of this entire run we had from November also correlating right to about the $45 price point, okay? Love to see an area of confluence when you have two different Fibonacci trends that are aligning on the same area, all right? I'm going to get my Fibonacci tool, retracement tool up here. We're going to draw that retracement going from the run we had in the beginning of November when we got the efficacy numbers. And as I mentioned, the 618 right at about $45. That's a nice area of support we've seen for Uber. We're trading at $49.65. Uber, as I mentioned, 618 of the move from November. You got a 382 from the entire move of the COVID lows, $45. You bounce off that level. We're sitting at $49.52. Still well off the $64 high that we got in Uber back in February, but off a bit today, down 2.4% as they'll be issuing 1.3 million shares to sell from stockholders. All right, let's jump around to some of the FANG stocks this morning and see how they're trading. Amazon shares, quite a run from Amazon recently, just on June 7th. So you're talking about 8 days ago, Amazon was trading at $31.72. How about trading exactly $200 above that price point right now with $33.72? Amazon pushing up near the all-time highs at $35.54. We'll check out Microsoft shares right up there near all-time highs as well. Not surprising when you get the NASDAQ 100 closing at an all-time high yesterday. Google just continues to show strength, almost making new all-time highs on almost a daily basis. Google, new all-time high today, $25.37. You're trading right now at $25.28. We'll jump over to Facebook shares. Facebook, there it is, all-time high as well. Excuse me, trading at $3.37. You put Facebook on a 3-year weekly. My goodness, folks. I mean, you make it down to 140 at the lows of COVID, but coming into COVID, you were at 220, let alone you back things up to where we were when the lows of 2018, remember that sell-off, Christmas Eve 2018, you're now almost triple the price of where we were then in Facebook. From 123, we're pushing almost 340 this morning on Facebook shares. Let's jump over to Twitter as well. Twitter shares, $60.74, quite a pullback from the $80 we had back in February. All right, what else we got going on? Let's jump around to some of the headlines I got up here, and we'll take a look. Stocks making moves. We're going to start it off with Sage Therapeutics. They're really moving today. So the drug maker tanked 17.5% pre-market. We'll see how they are on the open. Following the release of a study with results of the experimental depression drug. The drop comes even though the treatment resulted in statistically significant improvement in symptoms. But the market had greater expectations in a big way. Let's see how it's reacting. There you go, down about 11%. So pairing some of the losses, there you see it though. Talk about a quick move to 81, down to 56. We're back to 65. You're still down about 11% on this equity out on that news. Remarkable action. And let's jump to some of those meme stocks. AMC up 3.6% today. GameStop down 3% today. The run continues. The S&P is pulling back a bit, 42.41. Not bad pricing, all things considered. Stay tuned, folks. We'll be right back after the break.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. Just like that, we got all the markets in the red. S&P's negative by 4 points at 42.41. Pretty marginal declines, though, when you look at it in the context of where we are in these markets, pushing near all-time highs. NASDAQ 100 negative by 21 points, 14,096. For all perspectives right now, you take yesterday's close out of the mix. We're talking about a record price in the NASDAQ 100. I believe we're talking about almost a record price in the S&Ps. Dow's about 800 points from that price level right now, 35,000 on the futures, and we're only about 40 points from that level in the Russell at 23.18. Jumping around to commodities, crude just continuing to show strength. Crude up 95 cents at 71.84. You get the gold contract holding pretty steady right now, up $1 at 18.67, and notes and bonds, some tame action as well. We get the 10-year right now down one tick at 132.15. You're talking about a yield of 1.507%, the yield on the 10-year. All right, jumping around to what else we got going on. Interesting story out here talking about Deutsche Bank. Finally, some good news for Deutsche Bank. Usually the headline's not too kind. Deutsche Bank set to reap $1 billion on traders' freight bet. So Lendon, distressed debt specialist, Stefan led investment in Zim. Israeli firm was listed in January as shipping rates soared. It's really remarkable. Some of the money that some of these banks met couldn't join billionaire. Let's see how this goes down. 35-year-old traders still had much to celebrate from the desk in London. Yeah, billion-dollar trade. Starting in 2016, the distressed debt trader wagered under $100 million on bonds and bank loans of Zim that were trading at a heavy discount. He bought equity in the company for a few $1 million amid depressed shipping rates. Those investments have now surged and could effectively hand Deutsche Bank a win that would equal about one quarter of its 2020 investment banking profit. Remarkable. When you look at it, it'd be interesting to see how this shakes out in terms of, are they going to be taking these types of risky bets in the future? You've seen some of the banks pare things back as some of those risky bets to the likes of Archegos have gone very poorly, but nonetheless a big one out there for Deutsche. And jumping over to the housing market, interesting one out there from Bloomberg as well, talking about potentially the world's bubbliest housing market flash 2008 style warnings. So the real estate prices around the world flashing the kind of bubble warnings that haven't been seen since the run-up to 2008. New Zealand, Canada, Sweden rank as the world's frothiest housing markets. The U.S. has to be somewhere, right? I mean, there's just bananas. Based on key indicators used in that Bloomberg Economics Dashboard, the UK and the US also near the top of the risk ratings. Wouldn't be surprising considering the run that we've had recently and how it goes in. And as they put it here, one of the economists, a cocktail of ingredients is sending housing prices to unprecedented levels worldwide, record low interest rates, unparalleled fiscal stimulus, lockdown savings ready to be used as deposits, limited housing stock, and expectations of a robust recovery in the global economy all contributing. What to consider here, right, is that where does the market go after the transitory nature of everything in housing? The one thing that has been brought up continuously, and I agree, is that people are not over leveraged, which is a big part of it. Now, the problem comes in, though, when you get prices for houses that are so far above where the rental market is, and you're starting to see it a little bit. You really are in the industry in terms of, it's very difficult on some of these lofty levels to rationalize the home price purchase versus the rental market and what you may be paying. Where those sort out, maybe the rental market has to rise a bit. Maybe the market for housing prices needs to pull back a bit. We'll find out. But this one's going to be talked about for a while as well. But nonetheless, they talk about the bubble ranking. You got New Zealand, Canada, Sweden, Norway, UK, Denmark, and US. And there you go. Price to rent ratio, the first one up there that they're talking about in terms of where they are. I mean, New Zealand, Canada, bananas. You're talking about 204 in their ratio. You get down to the US, 122.9, not as lofty. Price to income ratio, a big one, right? Real price growth, nominal price growth, annual credit growth in there as well. And you see the rankings as they go down the line. But something to keep your eye on as they continue to rise in that housing market. Jumping back to some of the equities that are moving, Vimeo. So Vimeo is a service like YouTube. We actually use it at TFNN for some of our video updates within our newsletter subscribers. Vimeo allows you a little bit more control than YouTube. For instance, YouTube, we're not able to upload videos in there and put them in the same type of way, whereas subscribers gain access to whether it's my newsletter, Rocket Equities and Options, Basil Chapman for the opening call puts out a bunch of great videos, Larry Pesavento for Fibonacci 24/7 puts out some great videos out there as well. And, of course, we put them behind a wall for subscribers, right? It's subscriber-only content. Vimeo allows you more ability to use your videos and control who sees them. In YouTube, you can't quite do it in the same way, so just kind of describing it. So Vimeo, very familiar. We use them at TFNN. Total revenue in May rose 42% from a year ago. The video services company also seeing average revenue per user up 18%. So we pay for that service to be able to use it in the way we do. As a consumer, you're able to view that just like if you're a YouTube consumer. You can consume YouTube without paying for it, but we do pay for it. We're in there, and their numbers are rising. Now, is it VMEO? Yes, VMEO is their symbol. Flat today. You check out this chart, and look, what did they just go public? Yeah, that was a weekly and daily. They pushed to $58. You're down to $38, and you're trading at $45. Be interesting to see how they go from there. But a strong company, and they've been, from a consumer base, in terms of TFNN being the consumer, a good product that we've been able to use for TFNN. Cracker Barrel, they're selling shares as well. How about a $275 million private offering of convertible senior notes due in 2026? They're going to use the proceeds to pay debt and for general corporate purposes. CBRL, good old Cracker Barrel. Whoops, CBRL. And we're down about 1.6%, but look at the clawback in terms of the pop on the open. We were as low as 148. We're at 150.86. You back this thing up for a 3-year weekly, and you can see that maybe they're saying, you know what, we're going to shore up our balance sheet a little bit here. We're trading at about 150. We're triple the price that we were at the lows of COVID. I mean, you're even well above. We came into 2021 at a price point of about 123 to 130 on Cracker Barrel. You're $20 above that price level. Not surprising to see some of these companies go to the market and make sure their balance sheets are shored up as we deal with some transitory nature. You're still seeing it, right? As in, we're not quite out of this yet. The future is bright, but companies like Cracker Barrel are probably saying, you know what, we're going to expire some debt. We're going to shore up our balance sheet. We're going to issue those shares to make sure that we get over the next few months to where we're really back to a bustling economy where COVID is not even in anybody's mind. Unfortunately, folks, living in Florida, I'm vaccinated and I'm not worried about myself. But I have kids. I got a newborn. They don't have the opportunity to be vaccinated, and unfortunately, we still got cases persisting. Ron DeSantis, not a fan of how he's handled this at all, not a fan overall in general of his politics. But they're not even putting out daily updates of the cases in Florida, folks, because they don't want people to know that, unfortunately, those cases are still spreading in the state. And I'm relaying that info because it matters. I have kids. I can't bring those kids out to restaurants just yet without feeling comfortable, because Florida is probably one of the worst states out there. All right? That matters to the market. This isn't politics. It's not COVID. Okay, it matters that Florida has more cases than any other state. It matters that our governor isn't even telling people anymore on a daily basis how many cases there are, because he doesn't want that data out there. Okay, and that is affecting some of these companies, folks. I'm telling you, as a consumer myself. All right, I went to dinner on the weekend. I went to a movie theater on the weekend. Couldn't bring my kids because I'm not comfortable yet, because they don't have a chance to be vaccinated. So if you got that opportunity, folks, get vaccinated. Make it happen. Let's get over this hump. Stay tuned. We'll be right back to finish up the show.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave! Sign up for the Opening Call risk-free today.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We got the S&Ps minus 4 points right now. NASDAQ 100 is flat. The Dow, kind of the laggard, off about 117 points right now. I got a chart of Penn National Gaming up here. A little bit of volatility in the open, down to 78.60. We're back to 81. You jump over to DraftKings, DKNG. DraftKings down 6.8% today. Was down as low as 44. Thanks to our man Mark in the YouTube Tigers Den over there talking about hit by Hindenburg. So interesting action here in terms of why DraftKings and Penn shares trading lower. Penn not so much anymore. But DraftKings, so Penn was trading lower on the heels of the DraftKings news. So Hindenburg Research, short seller, notable short seller, is out there with a report titled DraftKings, a $21 billion SPAC betting it can hide its black market operations. I got the report up here. And not the kind of headlines you want to see if you're an investor in terms of the company went public in a three-way merger. Now, this is kind of all known in terms of DraftKings, its SPAC sponsor, and a Bulgaria-based gaming technology company called SB Tech. I was not familiar with that myself. SB Tech, this is Hindenburg. Now, they're biased as you can be. They're a short seller out here. They're out there pumping their own game. And this is always what's interesting, right? You talk about the recent fad of meme stocks, okay? And everybody's saying, is it really fair that they're out there on Reddit? They're out there pumping what they're going to do. This is the other side of it, folks. Hindenburg Research, they're out there pumping their own game. They're out there pumping why everybody should be selling these stocks. It's the same exact thing as some of the companies out there and traders out there pumping why you should be buying AMC and GameStop, okay? Same exact thing. Identical. There's no collusion. They're out there pumping why they should be selling versus some of the people out there pumping why they should be buying. Now, as Hindenburg puts it, there's some lofty language in here. Unbeknownst to investors, DraftKings merger with SB Tech also brings exposure to extensive dealings in black market gaming, money laundering, and organized crime. Are you going to be a member of organized crime by buying DraftKings today, folks? I kid, of course. Some strong language. Nonetheless, you're seeing it hit DraftKings today. That's why it's down 7.3%. Gaming, a big area to be in, of course, but nonetheless interesting. DraftKings down about, 7%. Stay tuned, folks. We got our man Basil Chapman coming up next. We got markets in the negative. Pretty tame things today to kick things off, and we get the Fed tomorrow, of course. Stay tuned, folks. We got our man Basil Chapman coming up next. Live programming all day at TFNN. Don't forget about Dave White's options webinar coming up tomorrow, folks, on the